Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Here we talk again on the gold market, but this time we'll start with the weekly chart, just because the collapse was rather strong, and actually on the daily chart it's not too many things to discuss, and the major information to us stands on the weekly chart. In general, in 2 words about the fundamental background and what we did in the weekly report. So we have tried to understand how investors and general market treats the stress and collapse, the Fed statement, and so on. Actually, we have done this in the weekly report on the Forex market, and mostly the conclusion stands the same. So that might be the starting point of the long-term tendency of the interest rates and the Fed policy. So the background, the first brick in the background has been set. But this is really a long-term story, and is currently the analysis from the tells that it's still the 18 months to the first rate change, and even tapering has not started yet. Although we expect that it will be announced somewhere in September, and the first tapering should happen in January of 2022. So it means that in the longer term, it doesn't matter when the Fed said for the first time about the changing the policy. So whether it has happened right now in June, or maybe the Fed will tell us a bit later in July or August, doesn't matter, because in general what the important thing for us is that Fed has confirmed our view, that we think that gold stands in the last stage of the bullish trend, and now we're standing in the moment of the breaking and changing the trend in the bearish. So it will be some volatile period when the market will start to break the trend and preparing for new tendency that should start. So this is the most important thing that we have for a long-term perspective. At the same time, in the shorter term, it doesn't matter that we can't consider taking the new long positions, because the pullbacks here probably will happen, and not once, since it's a long way till the first rate change. For example, even on the weekly chart this week, you could see that overall background stands not really bad, despite the collapse that we had. And if we said that in the longer term we're not considering taking any bullish positions for a long-term investment in the gold, but in the shorter term we could make some trades on the pullbacks and retracements that could be rather extended, since the background stands on the weekly chart. For example, take a look. Market has dropped and has reached a major level, major support around 1770. At the same time, price hits the weekly oversold level. Altogether, it brings us the Jordan-Napoli bullish stretch patch that suggests some pullback here. Additionally, what's also important, trend was able to stay bullish. And right on the next week, we need to keep an eye on the possible bullish grabber. And putting it all together, if we will get the stretch accompanied with the bullish grabber here or something of that sort, that might be not really bad environment for considering taking the long position around this area. Maybe we will not get real erasing of this drop and returning back to the 1925, but at least some 50%, 60, maybe even 60% pullbacks, rather very probable. So this first moment. Second, if you remember, we talked about the possible hand and shoulders pattern here. Although this performance, of course, not very friendly to the hand and shoulders, especially collapse on the right arm, where the bulls should control the market. But at least this shape actually visible here. Maybe it will not be particularly the hand and shoulders, but maybe we will use, if the pullback will start, we could use some extensions based on this pattern to the upside to calculate the potential targets. All in all, we need to keep an eye on what will happen by the end of this week, as market really could prepare some background for retracement. That's our major task, because at this point, although overall context looks bearish on the monthly chart, and it's really a strong downside action that suggests downside continuation. At this point, with the daily and weekly oversold right at the major support, it's not reasonable to consider taking the new short positions. So, and actually many big companies and analysts also suggest that the pullback, for example, Commerzbank keeps their target of the 2000 level for this year for the gold. Goldman Sachs also tells that it was a bit overreaction on the statement, and I think that's mostly more emotional and nervousness on the market. But if you will take the reasonable view on the Fed statement, you will see that, well, it was not really new, because it was well-known information that the Fed will start to change something in 2023. It was suggested by the Euro-dollars contracts, by the Fed fund futures rate. So, it was scaring a bit for the market probably, and then that leads for a very strong reaction. The same story on the Forex. Societe Generale and Goldman Sachs, the same Goldman Sachs suggests that dollar still should become weaker and hit 127 target. So we talked about this in a yellow report recently. That's why some probability exists that we still could get the pullback. Who knows, maybe we'll climb even above this area. Besides, if we'll take a look, for example, on the interest rates, you could see very different reaction. So indeed, in the first announcement, it was really a rally on interest rates, very significant, approximately 10 points to the upside, from the 142 to the 158, even more than 10 points. But take a look, later all this reaction has been faded by this drop. On the gold market, we do not see it yet. Besides, you can see that ABC pattern on interest rates has not been reached, so it's more chance that market even could proceed lower here and complete this ABC target. So some chances on reasonable pullback and reaction on the support exist. At least this support area that we have on the gold market was strong to trigger some pullback here. Maybe it will not be very significant, but 30%, 50% is quite enough to get a good result on the daily intraday charts right from here. On the daily chart, we do not see something really special. One thing that we could say here is also the same stretch pattern. Market also stands oversold at the same FIB support area. Probably we could keep an eye on this thrust. Yes, it has less bars that Judd Napoli suggests in their analysis, so not 8 bars, but just 6. But as bars are very strong and long, I think that it's, well, in general suitable for Judd Napoli patients. Brent bar and the double repo, well, in this case, it's probably Brent bar the more probable if the pullback will happen here. And still could be watched here in perspective of the 1-2 weeks, or maybe this will be formed something. Well, on the intraday charts, on the 4 time frame chart, we have nothing special, but just levels that we could use for trading. For instance, for Brent bar on the daily, it seems that 1820 looks very nice. It's potential area where a market could show the pullback in its first moment. On the hourly chart, we could start watching for bullish patterns, because we have in mind the potential bullish context on the weekly chart, and the pullback could start. So we could keep an eye on the patterns that could trigger and become the starting point of this pullback. For example, on the hourly chart, it's some hints on the possible divergence, although MACD hasn't crossed yet here, but you could see the big difference between the bottoms, and that looks bullish. And potentially, I see here there's 2 possible patterns. First is the hand and shoulders. If market, for instance, drop lower to the 1618 extension, 1750 approximately, and starts upper direction. Or it might be the 3 drive. For instance, it could be first drive, second drive 127 of the first, and some pullback, and then another drop to the 1750, the third drive. Currently, these 2 potential patterns that we could keep an eye on, as they could start or trigger the upward pullback. So that's what we intend to do on the gold market next week.